Welcome back. Well, it's looking good on the screen, at least in the broader markets. A lot of pockets actually doing well with real estate charting the tops. But we also have Siddhartha Khemka of Motilal Oswal Group joining us to talk to us about their 2024 bets and what really one should watch out for. But before I come to stock specific, Siddhartha, your view on the market itself, the start hasn't been the most euphoric because we have been consolidating. Do you think this is going to be the nature, at least for the next few weeks or months? Going forward, that there would be a bit of sideways move?
Anisha, hi, and wishing the entire ET Now team a very happy new year, and same to all the viewers of ET Now, wishing them a very happy and prosperous 2024. So, if you look at the market view, I think after 2 months, consecutive months of sharp up move, Nifty moved by almost 5% in November, followed by 8% move in December. The start of the year has been a bit somber, and I think because market is waiting for fresh triggers. There was the meeting minutes from Fed, which was due yesterday, which gave out some more clarity as to when this Fed rate cut could happen, which is what excited the market the most in December. And B, the quarterly results, which would start coming in, and that would be the next trigger for the market. In terms of overall valuations, we see that markets are comfortable, especially the large caps. The Nifty is trading at a 1-year forward P of 19 and a half, which is still at a discount to its last 10-year average of 20 times. So we see there is room for the market to move up, given that quarterly results or the corporate earnings have been pretty strong, and that continues to be the case. So in the first half of FY24, the Nifty earnings have been pretty strong. Q1, the earnings grew about 31%, Q2 about 28%, and the full year asking rate is just about 22%. So we believe that next 2 years, so FY24-25, the Nifty earnings would continue to grow at 18 to 20%, which should drive the returns from the market. So we don't expect much of re-rating as we are near the mean of around 20 times. So the earnings will drive the returns, and that is what we believe investors should look for.
That's Amit also joining into the conversation. As I'm looking at your picks, 4 out of the 10 stocks that you have selected in your top 2024 picks are PSUs. Despite the sharp run-up that we have seen in 2023, why are you so bullish on the PSU space?
Yeah, so a very nice observation there. So what we are witnessing is that all the public sector enterprises are witnessing a strong improvement in the financials, and not only the balance sheets have improved. Some of them are from the core industrial space where the order book has seen a sharp improvement. And what is most important is that the return ratios are improving sharply, and that is what is leading to the re-rating. And to combine that all, finally, the valuations, if you look at most of them, they are still trading at a big discount to the private players. And hence, we see a lot of room for upside in the PSUs in this year.
What of room are you talking about, like a 10% upside, or it could be 20-30% as well? And I ask this question because most of these stocks have actually doubled or at least given a 60-70% return in the year gone by already.
Yeah, Anisha, I think there is a room for at least 20-25% upside. You look at, if I were to look at case by case specifics, so if you look at Coal India, it is still trading at about 9 times on a forward PE. You look at some of the oil companies, for example, ONGC, it is trading at less than 5 times. And we see a good room for upside, especially if you look at the likes of ONGC, Oil India. They are trading at around 5 times. The return ratios are sharply improving from around for ONGC from about 15-16% to 19%. Oil India, the upside, the ROEs are improving from 9% to 16%. So definitely there is a lot of catch up that has happened, but we believe that there is a lot of room given that the valuations are still at a discount, and there is a good dividend yield also in these stocks, which gives them which gives a lot of comfort.
True.
Say for example, Coal India, we have a 5% dividend yield even after the stock has doubled.
Fair. No, that's an interesting point, of course. Dividend yield gives that, support as well. But I'm intrigued by your choice in real estate pack, that Sunteck Realty. is the only reason of choosing the stock is the underperformance? Because if you look at quality wise and the pipeline wise, there are a lot better names. Why not, let's say, a DLF or a macro tech developer of a world, and why Sunteck?
So very good again point there. So real estate is something we have been quite bullish on for quite some time, and they have delivered the returns handsomely. Our preferred picks have been Godrej Properties and Macrotech, but at current valuations after the move up, we saw a good valuation gap in Sunteck. What we also like in Sunteck is that as an industry as a whole in real estate, we have seen strong demand from the premium and luxury segment, which is what Sunteck caters to. And this segment is little less sensitive to the interest rates, and that has been positive for the entire real estate sector, where the bookings, or you can say the launch bookings, we have seen record bookings, and is mostly driven by the premium and luxury segment. So valuation wise comfortable, segment wise we see that in the right space, and they have the good potential. They're turning cash also. In terms of balance sheet also, we are seeing strong balance sheet. They have recently tied up with IFC for further growth, and management is expecting to add at least another 15 to 20,000 worth crores of projects over the next 2-3 years, which should kind of give the growth for its luxury offerings.
Siddharth, why Hero Moto? Given the fact that there are less number of wedding days in 2024 compared to 2023, won't that impact the volume? This coupled with competitive intensity could also have an impact on the volumes for Hero Moto in this calendar year. So why are you picking Hero Moto over other players?
Yeah, Somit. So I think in our overall auto segment, we have moved our preference from passenger vehicles to two-wheelers. What we see is that passenger vehicles or the cars, the four-wheelers, they, after having a very good run in 2023, are likely to witness a sluggish 2024. Despite they had a very good festive season, and the marriage season, as you rightly highlighted, was very strong in 2023. But we believe that the overhang of the EV penetration in two-wheelers has been done with. Most of these players, the large OEMs, have now got their products in the EV two-wheeler space, and they are witnessing the growth. Hero Moto on its own is kind of aiming to has entered from the mass market to the premium market through its tie-up with the Harley Davidson, where it plans to ramp up production capacity to 10,000 units per month. There is a strong demand for this segment that we are witnessing for Hero. They currently have 200 premium outlets, which they are targeting to increase to 500 in the next 6 months. So overall, we believe that Hero is in the right spot with the growth across segments, plus the valuation comfort that we see in Hero makes us more positive on Hero Motor at current juncture.
Siddharth, for explaining us and taking us through all the 2024 picks. With that, let's slip into a short break, and we'll be back with more news on the other side.